To business news now, and stocks in Asia fell on Tuesday after China's central bank cut another two key lending rates. Investors are worried the latest rate cut would not be enough to boost confidence in the weakening economy. The People's Bank of China lowered its one-year loan prime rate by 10 basis points to 3.55% and five-year LPR by the same margin to 4.2%. It's the latest in a string of moves by Beijing to shore up a slowing recovery in the world's second-largest economy as it struggles with record-high youth unemployment, a weak property sector, and looming deflation risks. Economists widely expect additional stimulus to be rolled out in the coming months. Well, let's get more on this now with Josh Mahoney in London. He's Chief Market Analyst at Scope Markets. Hi there, Josh. So most of the world is raising interest rates, but the second biggest economy is lowering them. How does Beijing factor this into its plans to stimulate growth? Does it pose any challenges?
Yeah, I mean, what I would say is that arguably these other central banks would love to be able to cut interest rates. The difference here is that China doesn't necessarily have the same issue of significantly over-target inflation. Instead, they've got inflation that's near enough zero, and that allows them to step in where necessary. And it is necessary at the moment. Of course, they had 3 years of the zero COVID policy. Moving out of that, there was an expectation that we're going to see a massive economic boom. It is flagging. We've seen weaker than expected figures across retail sales, which of course is talking of the domestic demand picture, the likes of fixed asset investment, and a number of other readings. So they're trying to stimulate the economy. Markets aren't necessarily taking this as you might think, because they'd actually been expecting more. You alluded to the fact that it's been a 10 basis point move. People were widely expecting around a 15 basis point move. And you also alluded to the fact that much of this has a footing in the housing market. The housing market is so important. And given the fact that these rates are directly linked to what people are paying on their mortgages, a 15 basis point move, as expected, would have helped a little bit more. But certainly, this comes off the back of recent actions that we also saw coming in last week. So it's part of a plethora of different policies that I think is going to roll on for a period of time.
And Josh, what did potential foreign investors take away from U.S. Secretary of State Antony Blinken's recent trip to China? Can we expect cooler tensions to renew interest from U.S. firms, or are restrictions on both sides of the Pacific here to stay?
Yeah, I think this is a case of really trying to elevate relations that had been at rock bottom recently. I don't necessarily think that this is suddenly going to be the beginning of a great partnership between the two. But certainly Antony Blinken, having gone over there, came out with comments that essentially alluded to him being happy for Taiwan to essentially be part of China, saying that the one China policy still remains the status quo, and that he doesn't support independence of Taiwan. That feels like a step change of some of the recent commentary that we have been seeing out of the Biden administration. So, certainly from an investor's standpoint, this does signal the potential for them to dip their toes back into some of those big names, the likes of Alibaba and the like. People have really been wanting to stay away from that just because of the uncertainty over US-China relations. And with the fact that that appears to be warming somewhat to a little bit more of a tepid temperature, not necessarily heating up to any sort of significant degree, that does allow people a little bit more confidence that perhaps some of the sanctions and policies that have been implemented over recent months might start to ease.
Josh Mahoney, thanks so much, live there from London. Thank you. Now to other top stories from around the world. Alibaba CEO and chairman Daniel Zhang will step down from his roles in September as the Chinese e-commerce giant undergoes a massive restructuring process. Vice chairman Joseph Tsai will succeed him as chairman, while the head of its domestic e-commerce unit, Eddie Wu, was named chief executive. In March, Alibaba unveiled plans to split itself into 6 independently run companies that could seek separate IPOs. Intel will spend around $33 billion to build 2 chip-making facilities in Germany as part of its expansion push in Europe. The move will help reduce the EU's dependence on suppliers in Asia. According to Bloomberg, the US chip maker will receive a government subsidy package worth about $11 billion. And Canada has pledged $265 million to support efforts to make the aerospace industry more environmentally sustainable. Ottawa said the fund will help generate high-value jobs while accelerating the transition to a net-zero economy. Canada, the world's fourth-largest oil producer, is aiming to cut carbon emissions up to 45% by the end of this decade.